In this video, we're breaking down a very unique credit union, and they have something that most credit unions don't actually offer. We're talking about credit repair loans, credit cards, personal loans up to $40,000, lines of credit, vehicle loans, mortgages, and don't forget the home equity lines of credit. They have something for everyone, so make sure you share this video.
Okay, money magnets, does your credit need work or is it already strong? Fortera has products for every stage of your financial journey. But okay, don't forget to hit the subscribe button. You don't want to miss any of our capital raising strategies, which is really important. We're dropping gems. And drop a comment. Let us know if you're working on your credit or already have access to capital or ready to gain access to capital. Let's dive into this, Marvin.
All right, let's start with what makes Fortera special.
Okay.
They have a credit builder loan, also called a credit repair loan. So now this video is going to have enough for everybody. Whether you got good credit or bad credit, we got something for you. I think this is genius for anyone that has thin credit files. Lately, I've been seeing a lot of 700 credit profiles that need more credit. And remember, anyone can join this credit union.
Okay, money magnets. Here's how it works. You borrow between $500 and $3,000.
Right.
But instead of getting the money up front, Fortera holds it in a savings account for you.
Right.
That right there can be a cash flow changer. You make monthly payments for 12 to 24 months. And for those payments, guess what? You get it reported to all three credit bureaus.
Right.
Experian, Equifax, and TransUnion, and every on-time payment builds positive credit history, which is about 35% of your credit score. You know, that's a big part of the makeup.
Yep.
That's the biggest factor. So you want to keep that in mind.
And at the end of the term, you get all your money back minus a small amount for interest. So you're essentially paying yourself while you build credit. I think this is better than some of those credit builders other companies sell.
I have to agree, Marvin. But let's say you do a $2,000 credit builder loan for 12 months at about 8% APR. Your payment is only about $174 a month.
Right.
Cash flow changer.
Yeah.
And after 12 months of on-time payment, you get back approximately $1,920 money magnets.
Yeah.
You paid about $80 in interest to add 12 months of positive trade lines to your credit. That right there, you can't go wrong.
Yep, and that's a small price to pay for potentially raising your credit score 50 to 100 points, which then qualifies you for better rates on everything else. And if you have bankruptcies, collections, or late payments, this is like your fresh start. You're providing to lenders that you can manage credit responsibly now.
Now, let's dive into the credit card options.
Yeah.
Getting to the good part, money magnets. They have both secure and unsecured credit cards depending on your credit profile.
Right.
The secure Visa card starts with a deposit as low as $300, which becomes your credit limit.
Right.
Perfect for rebuilding, especially on thin credit files.
Yep, you can use it like a regular credit card, making on-time payments, and after 12 to 18 months of responsible use, you can graduate to an unsecured card and get your deposit back.
Okay, their Platinum Rewards Visa is an unsecured option with no annual fee, and you know how I feel about holding cards in your wallet with no fees, okay? And the rates start at about 11.9% APR for qualified buyers. You earn rewards on every purchase, which is like gas, groceries, dining, you even travel. Like we travel a lot, Marvin.
Yeah.
Those points add up, and you can redeem them for cash back or even a statement credit.
Right.
Now, credit limits go all the way up to $25,000, depending on your credit worthiness and your income.
Right.
That's serious purchasing power for you and your business.
And look, here's the strategy. Use the card for regular business expenses or personal expenses that you already paying for. Pay the balance in full each month, and now you're building credit while earning rewards. No interest charges if you pay in full at the end of the month. Plus, you're establishing a strong payment history that boosts your credit score for bigger loans down the road. And like I said, I see a lot of, scores that look like this. All right, and Fortera reports to all 3 credit bureaus monthly. So every responsible month of card usage is working in your favor. They actually pull Equifax when it comes to their approvals on their personal products. So make sure your Equifax is over 700. Remove those freezes of fraud alerts and have less than 3 inquiries.
Okay, Marvin, let's get to the big one. The personal loans. Okay, they go up to $40,000 and the APR starts at 9.9%.
Right.
Oh my God. For well-qualified buyers, keep that in mind.
Yeah.
That right there is a cash flow changer. These are unsecured loans, no collateral required, so you don't risk losing your home, your car, or your business assets. The terms range anywhere from 12 to 60 months, giving you the flexibility on monthly payments based on your cash flow needs.
All right, Glo, let's break down the numbers.
Okay.
A $40,000 loan at 10% APR for 60 months will run you about $850 a month. That's manageable for a business generating consistent revenue. But make sure you use the capital for inventory, equipment, or marketing, or hiring some key team members for your business, because you want to make this money make money. And the key is making sure whatever you're funding generates more income than the $850 monthly payment, because you want to have a great positive ROI on your investment.
Yay, we're talking about making money. I'm loving that. Okay. But if you're buying equipment, that increases your productivity by $2,000 a month. You're netting about $1,150 after the loan payment. That's smart leverage, and that's what it's about, Money Magnets. And there's no prepayment penalties.
Right.
You pay it off early when you have extra cash flow, and you can save on interest. Marvin, this right here is like, this is a game changer.
Because it's not what you make, it's what you keep. And every on-time payment actually strengthens your credit profile, making you eligible for even larger loans and better rates in the future. This is how you build a track record with lenders. Start with what you qualify for, prove yourself, then scale up. Don't get mad if you get a lower limit than what you think. 6 months, a year down the line, you're going to laugh at what they started you out with.
I'm one of those people that get mad at the low limits, okay? But let's dive into the personal lines of credit, which is our favorite product because of the flexibility that, they provide.
Right.
Okay, so they offer lines up to $25,000 with variable rates starting at around 10.5%. You can't beat that.
And here's why it's so powerful. You only pay interest on what you actually use, not the full credit limit like a loan. So if you got a $25,000 line and you only use $10,000, you're only paying interest on that $10,000. You can access the funds instantly via check, online transfer, or a linked debit card. It's like having emergency capital on standby 24/7. And that's the difference between a loan and a line.
Okay, sign me up because I need that. This is perfect for business owners like myself who have seasonal cash flow or unexpected opportunities that may require quick capital, inventory deals that pop up. Draw from your line of credit. Equipment may break down. You can use your line. Marketing campaign shows great ROI. Scale it with your line. This is just a good way overall for you to have money, when you need it and not need it and don't have it.
Yep. And then when revenue comes in, make sure you pay it down so you will replenish your available credit. It's like a revolving credit that works with your business cycle. Interest rates are typically lower than credit cards. So if you need to carry a balance for 30 to 90 days, you're saving money compared to having cards with high APRs.
Okay, now, just like everything else, responsible use gets reported to the credit bureaus, which is really important because it helps you rebuild your credit. It helps your credit rating, while maintaining financial flexibility.
Right.
And you want to think of this as a business safety net.
Right.
And your opportunity fund rolled into one product.
Exactly. It's actually a pretty cool thing to have. Now, let's talk about vehicle loans, because transportation is essential for most businesses, and Fortera has competitive rates. They finance new and used vehicles with rates starting as low as 5.49% for new cars and 5.99 for used vehicles with excellent credit. Because we just had to buy a van for our restaurant.
Okay, y'all ready for it, right? I got my hand up. Marvin, I'm ready for my new car. Marvin, are you ready?
We working on it.
Okay, I'm gonna keep saying it every video, okay? Now, terms for the vehicle loans, they go up to 84 months. That's a pretty long time, which is 7 years. That keeps monthly payments manageable, even on higher priced vehicles, Marvin. For example, a $30,000 vehicle at 6% APR for 72 months will run you about $485 per month. Marvin, that's really good.
Yeah.
That's affordable for most business budgets.
And even if you're getting a personal car. So here's the business owner advantage. If you use a used vehicle for business purposes, you can deduct mileage and actual expenses, including loan interest.
Wow.
Remember, guys, that Section 179 allows you to deduct up to $28,900 of a vehicle's purchase price in the first year if it's used for more than 50% for the business.
Okay, so what that means is that work truck, delivery van, or vehicle that you're using for client meetings, delivering food like we do, you're getting a tax benefits while building your credit through a one-time payment. Fortera finances cars, trucks, SUVs, motorcycles, RVs, and boats. Whatever your transportation or recreational needs are, they got you covered. They got me covered too, so I need that car.
And they offer pre-approval, which gives you more negotiating power at the dealership. You can walk in as a cash buyer, essentially. No prepayment penalties means if you want to pay it off early and you want to save on interest, you can do that without fees. Every monthly payment reports to all 3 credit bureaus. Guess what? Adding another positive trade line to your credit profile.
Okay, you paying cash? What you doing, partner? Okay, money magnets, I'm sorry. I'm going to keep asking for my car, but let's jump into the mortgages. Now, let's talk about building long-term wealth through home ownership, which is really important. You know, Fortera offers competitive mortgage products. They have conventional loans, they have FHA loans, they have VA loans for veterans, and USDA loans for rural properties, which, Marvin, you used to buy USDA.
Yeah, do not slip on USDA. In certain areas, those can be gems. And look, the conventional loans start as little as 3% down for first-time home buyers. That's about $6,000 down on a $200,000 home. FHA, on the other hand, requires 3.5% down and are more flexible with credit scores. So if your credit score is between 500 and the 620 range, FHA might be your path.
But on the VA loans for military members and veterans, 0% down. You know, that right there is really, really good. USDA loans for eligible rural areas also have a 0 down. You know, you can't beat that. You know, so you don't want to sleep on that. Fixed rate mortgages lock in your rate for 15 to 20 or even 30 years, and your principal and interest payments never change.
That's predictable for budgeting. You know exactly what your housing costs will be for decades, which means month in, month out, you know what your payment is. For business owners, real estate is one of the most reliable wealth building tools. You're building equity while potentially generating rental income.
Okay, but let's talk about the house hacking strategy. So, like buying a duplex, living in one unit and renting out the other one can make your mortgage payment nearly free. That right there is a cash flow changer, money magnet. Home office deductions, property appreciation, and mortgage interest deductions all create tax advantages for business owners. You want to keep that in mind. Getting pre-qualified strengthens your negotiating position. Sellers take you serious when your financing is already lined up.
Now let's talk about the home equity lines of credit. What I love about the HELOCs, they let you actually leverage the equity that you've built in your home for either business or personal needs. So if your home is worth $300,000 and you owe $150,000, you have $150,000 in equity. Fortera typically lets you borrow up to 80% of your home's value minus what you owe. So let's just say at 80% of $300,000 is $240,000. Now you got to remember, subtract the $150,000 mortgage balance, and you could access up to $90,000 through a HELOC. That gives you money to either start a business or do some repairs around the house.
And Marvin, HELOCs are becoming more and more popular because the interest rates are typically lower than the personal loan or the credit cards.
Right.
They're around 7 to 9% because your home secures the loan.
Right.
Okay? If you use the funds for home improvements, the interest rate may be tax deductible.
Yeah.
Always verify with your tax advisors. HELOCs have a draw period, usually 10 years, where you can borrow and repay as needed.
Right.
That's important, money magnet. You typically only pay interest during the phase.
After the draw period, you enter a repayment where you pay back both the principal and the interest over 10 to 20 years. For business owners, this could be strategic capital, using it for business expansion, inventory, marketing campaigns, or equipment that generates a nice ROI.
Okay, the key is using the money wisely. Only for investments that generate income exceeding the interest you're paying. That's really important. And because it's a line of credit, you only pay interest on what you actually use, Marvin. Access $50,000, but may only use $25,000 of the 50. You're only paying interest on the $25,000. That's amazing.
All right, this is what I like. Fortera Credit Union offers a complete financial ecosystem for credit repair all the way to home ownership and business funding. Whether you're starting with a $500 credit builder loan or if you're accessing $40,000 in personal loans, they have a product for every stage of your financial journey.
Okay, the strategy is very simple, money magnets. You start where you are. Build your credit profile on a one-time payment. Then you graduate to larger funding products.
If you found this information valuable, make sure you hit the subscribe button and hit the notification bell so you never miss one of our capital raising videos. All right, and here's the thing. Knowing about these products is just step one. Implementation is where the magic happens. Make sure you take action.
Most definitely. And that's why we're offering a free business strategy call where we'll help you create a personal plan to raise capital and build your business credit. We'll analyze your current situation, identify which products you qualify for right now, and map out a 6 to 12 month funding roadmap, which is very important. Look in the description to book your free call. Spots are limited, money magnets.
And make sure, guys, drop a comment below telling us which one of these Fortera products that you're actually interested in. Is it the credit builder loan, personal loan, or maybe a HELOC? Reread every comment and we'll answer your questions. For the best results, let me tell you guys, make sure you have a 700 credit score on Equifax and you remove any freezes or fraud alerts before applying.
Hold up, because I have a gem.
What you got, Glove?
Okay, money magnets. If you want to hear about 4 credit unions that will work with you if you have bad credit, check out this next video.
I'm Mr. Smith.
And I'm Mrs. Smith.
And we're here to help empower your finances.